Hello everyone, so today we're going to be looking at Bitcoin and its relative strength index. Hopefully by looking at this we can get a better sense of what we think the market is currently doing and what we think the market is going to do in the near future. So let's get started. For me, I don't really like using the relative strength index, not in the way that most people use it, as in if it goes below, 40 or 30 RSI, then you buy. It's not a bad strategy, but I found it to be not as consistent. But I do think that it's a good metric in terms of measuring for the general sentiment, and I would probably use it as like a preceding indicator, meaning use this as the first layer indicator, and then stack other indicators on top to hone in on when to buy. So let's just see where Bitcoin is right now. So currently Bitcoin is hovering around 37 RSI. So and if we look at Bitcoin in terms of its entire history, we've only hit this part on the RSI, on the weekly, only a couple of times in the past. So based on this metric, right, we can tell that the general sentiment right now is worse than it was in May, right? Because notice how it's lower than it was in May, but we're not quite as severe as it was in March of 2020. So based on that, metric, we can tell that we're very, very close to some sort of bottom. So if we go ahead and look back even further, right, just go back one more right here. Back in 2019, the last time in 2019 it was there was when it broke down, right? It broke down to a new floor. So right as it broke to a new floor. So the RSI, although it doesn't tell you when, like it doesn't tell you if another drop is going to occur, like that's still within a realm of possibility, right? Like it would not be surprising if it had another drop right here, and then another drop, right? So it doesn't tell you when something is actually truly bottom, but it does tell you that how close of a bottom you are. So if we go back even further, right? The last time, the one prior to 2011, in 2014, right? We were right here, so there's still room to go down, right? It's not, the RSI is not saying that that there isn't room to go down, but that we're near some sort of bottom, like we're very close to some sort of bottom. So what is it? So based on what I'm reading from this, if if we're not at a bottom, which we could be, right? Like it would not be surprising if we bounce from here. Um, you know, we more or less have one more. Uh, if you've been here in May, right? May was pretty severe, right? May was pretty severe, but also March was also pretty severe. So I do have a sense that we're pretty close. So if we use the RSI and then we stack it with other indicators, let's see how it looks. Right? So I'm going ahead and turn on my other indicators. So this is what I like to use instead of RSI. For me, this is more accurate in terms of gauging sort of the general sentiment. If you look at this, right, typically when you see something like this, your first assumption is assume that it goes up from this point, right? Assume that it goes up from this point. So if we look at this green sentiment, so this red and green color measures the sentiment. This dotted line is for more of the accuracy of when to get in and out. So if you notice, right, there's a gap between this floor. So there's a gap right here, and there's some days. So what it's saying is that there's a higher pressure to go up on the daily, right? There's a higher pressure of it going on a daily. The last time we were in this sort of sentiment region right here, right? If you go ahead and look back, it signals towards an end, right? It signals towards an end of a drop. Now if we go back a little bit more, it's not so much here, right? Not so much here, but it also means that. So notice right here, right? This would correlate to around here. Essentially, what the way I'm reading this is, like I mentioned, in terms of the RSI, if we're not done dropping, we have one more, right? Like we can go up and get rejected, but this has one more. So what it implies is that if we are not done and it doesn't go up, right, just like this one, right, this one signaled a continuation of a rally, but this one didn't. So there's one more drop before it happens. So if we're not done dropping, we have one more. But I think the primary thing to watch out for is just you notice this general trend line right here, right? This general trend line. Breaking this would be a significant, we would want to break this. And notice how it lines up with this blue ichimoku line. Yeah. So the way I'm reading is that so right now I'm seeing it as a 60%, still 60% likely to go down, more likely to go down, and 40% for likely to go up. But once we break this blue line and we go up, then my sentiment would be 66% up, 33% down. Right? Just because, like for example, right here, right? Just because you broke the blue line doesn't mean that it's the end all be all. But the probability shifts dramatically, and the number that I would say is that we have to get above is 42,000. The reason being is that you typically in these sorts of drop, you want to get above the part. You want to get above the part, this whole candle high. So once you're above this high, then it shifts the momentum into the other direction. So if we see 42,000 in the near term, more or less, I am significantly more bull than I am bear. Like the odds of it going down to 27,000 drops dramatically. Like this would signify the bottom. And notice how there's a divergence right here, right? This for me, these indicators are a more accurate and better representation of what RSI is. People sometimes people use RSI to measure divergence and trying to see when something's gonna go up. But for me, this is a more clear picture, more clear signal. Combined with this is a more accurate representation of RSI. So just to recap, if we're not done dropping, we have one more, and ideally we want to break this trend line and hit 42,000. If we can get above 42,000 in the near term, then I think we're more or less set. This would signify the bottom. The other thing to note is that whenever we don't capitulate, we don't have to double bottom. Notice that in every sort of capitulation event, there's always a desire to get back down to this price. Notice how there's a desire to get back down to this price, right? So in every sort of capitulation, there's that like think about it this one, right? There's a capitulation right here, and then we have a desire to double bottom right here, right? If you look at this on the hourly, this is not a capitulation. So this is so let me go ahead and put it on BCUSD. Yeah. So if you look on this hourly, this drop here was a very sort of slow selling. It's not the same as this drop. Like notice how this volume here happens all in a singular time versus this was just a methodically slow selling. So I wouldn't classify this. So although on the daily it did look like the volume is the same as here, I wouldn't classify this as a capitulation. But it does look like as of right now we are wanting to go up. Although this pattern, so essentially this pattern, is like ascending triangle, right? I don't take these patterns to the bank because the probability of success of these patterns are not always is not very high. But essentially right now we're at a crucial point where either we break down. I've seen a lot of ascending triangle that just break down really really hard, or goes up really really high. So, but it does look like it's seeming to want to break out. Yeah. So I do have pretty high hopes on it breaking up simply because there's no capitulation, so there's no need to double bottom, and we are grinding the blue median line, which is a very good signal. We've already like somewhat broke it. So if we can close above it, and get to 42,000, I think this would signify the bear market is over. If we go ahead and just mirror this, right? We just go ahead and mirror this. We mirror this pattern, right? So typically what happens is, if you notice, right, there's this massive drop here, but then there's this massive pump here. Whenever something falls and goes up, they like to mirror in the same rate. So because we didn't have a violent drop, my expectation is that we won't have a violent rise. So we won't have like a sudden pump, and we can get a general feel for how the speed in which it's going to recover, right? So if I mirror this, right, go ahead and copy this, and then go ahead and flip it over, then my expectation is this would be the general speed. Can we double bottom? Yeah, well, sure, we can double bottom. I wouldn't put the odds of it. For me, if we double bottom, my expectation is we're actually going to go to 27,000. So, but that's not. I wouldn't rule that out. Like that certainly exists. We'll end up maintaining this trend line, right? Like imagine like this trend line is maintained and then it breaks down, or it can still go up like this. It's like it couldn't play out this pattern exactly, but I'm using this pattern just to more or less get a general sense of how fast to expect for us to recover. So if we were just measuring up to 42,000, we could hit it tomorrow. It wouldn't be surprising. But to solidly go above it, I don't expect us to be there until like 2 weeks later. So I do think that around that time is when the general sentiment is like the bear market is officially over. Yeah. Hopefully you guys found this video helpful. If you do, give it a like and thumbs up. And remember to comment down below what risk you took today. Yeah. Everyone, take care.